Hello and welcome to this week's US Stock Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing the factors that affect currency prices, and then I'll dive into the Dow Jones and this week's stocks of interest. Now before we jump into the report, I'd just like to mention that if you have any thoughts on investing or trading, please comment below and be sure to subscribe to our channel so you keep up to date. Let's get into this week's report. We are reminded in the media every day that our dollar is either going up or down against other currencies. However, very few understand what drives their movement or how this affects the stock market. So let me explain. Currency prices are simply determined by supply and demand, or the amount of buying and selling of various currencies in the foreign exchange market, or FX market as it is known. Like a stock trading on the stock market, the price of a currency will fluctuate throughout the day on the FX market, with the forces of supply and demand determining whether the currency rises or falls. When there are more buyers, the currency will rise, and when there are more sellers, the currency will fall. But what drives this supply and demand? Let's consider the 5 factors that affect currency prices. Firstly, rises in interest rates in a country will result in that currency appreciating in value. It does this because a higher interest rate provides better incentives for individuals to invest in cash. A rise in interest rates will also attract more foreign capital into the country, and as a result, demand for the currency increases, which therefore will see the currency rise in value. Lower interest rates, on the other hand, means lower returns on cash investments, making it less attractive. This can result in a currency falling in value as investors move cash away from a country into other markets. The second factor is inflation. Countries that have lower levels of inflation cause a currency to appreciate in value, as there is less money being injected into the economy. When inflation is low, the cost of goods and services will rise quite slowly. The opposite occurs when inflation is high, as the price of goods and services will rise rapidly. Increasing levels of inflation usually results in depreciation to a currency's value, and is often accompanied by higher interest rates to account for the extra money being brought into the economy. The third factor that will impact currency values is a country's balance of payments, and debt between imports and exports, and debt and foreign investments. If a country is spending more on imports than it gets from exporting goods and services, more money is going out of the economy, which often results in a currency depreciating in value. In addition, countries with higher amounts of debt are less likely to obtain foreign capital, which means that they will have to inject more money into the economy by raising inflation levels. The fourth factor is political stability. A country's political stability largely affects currency prices. A government with a stable economy is less risky for investors and ultimately a more desirable place to invest funds. Governments with strong economic and trade policies remove any doubt from the market and ultimately the strength of the currency. Instability in an economy, on the other hand, will likely see a currency depreciate as the risk of investing funds in that country becomes higher. The final factor that affects currencies is commodity prices. Countries such as Australia that are large exporters of raw materials are affected by movements in commodity prices. When commodity prices rise, countries who export heavily are likely to see their currency rise as they are getting more money in exchange for goods. The opposite is true of countries who are large importers of commodities, such as China. Higher import costs means the cost of manufacturing becomes higher and profit margins are squeezed. So there you have it, the 5 factors affecting currency prices. So now when you watch the news, you'll be able to have an appreciation of what might be happening in a particular country and whether it's good or bad for their currency. Stay tuned for my next report when I discuss how currency prices impact the stock market, as this will give you insights into where you look for stocks to buy and what to avoid. Just before we get into this week's stocks, I just wanted to get you up to date. I've been doing a lot of work upgrading our Trading Mentor course, which is our beginner or getting started course. For those of you who are interested in getting into the stock market and possibly interested in trading, get onto our website and have a look at the Trading Mentor course, because I've upgraded all the information, freshened it all up, and it is a really, really great starting point for you. So for those of you in the US, we do have a special edition of the Trading Mentor course, especially for you. It's just been launched. And remember, my book, Accelerate Your Wealth, was launched only just over a week ago in the US. So get online to our website, wealthwithin.us. It is also available in all good bookstores across the United States. So get in and get your copy now. Alrighty, here on your screen right now you got a monthly bar chart of the Dow on the left and a weekly bar chart of the Dow on the right. I'm just going to bring up the monthly chart and you can actually have a bit of a look at that. I'll just make the bars a little bit thicker so you can actually see them a little bit, and you can see here how the current month in October there's been a range of 2,000 points to where it closed last Friday on, what's the close there, 25,444, so 25,444. So if we look at the move from the high down to the low, at one point it was down 7.6, then it was it's now closing at 5.5. So you know, what they say, don't know, nothing to see here, don't panic, and that's really what I see. And look, the market is slowing down a little bit, but we saw it do it here. If you see back here, from that high to that one low, it was down 16% and closed down about 9 or 10%. And here we are, that's in August 2015. So it's not that it hasn't done it before. If we look at this low down to here, it was down 19%. And by the end of that month, it was only down 7%. At one stage here, that closing that month was down 15% in September 2011. So what we're seeing now is really not unusual. We've got another one there, and it's quite common for us to see this sort of stuff with the marketplace. So at this point in time, as I said, I don't think there's any sort of anything to really sort of worry too much about. Just using a nice little trend line through up here. If you understand, just understanding how to read charts. And as I was saying on our Australian report that I do quite every single week as well, and I was just saying that we've had on our website a survey form where we ask people if they want to do a 60-second survey, and people fill it out, and we've asked the questions and they fill it out, and we're just determining what sort of knowledge people have, and so what we can do and how we can help them in these recordings and other things that we're actually doing. And by and large, the answers are all the same. What do you need? I need to learn how to read these charts. I need to understand to how to buy properly, when to buy at the right time and when to sell, and how to sell at the right time, how to manage the trades. I need structure, process. I need a good education. But it is interesting that people watch free stuff all the time in the hope of getting a good education. Now, people do free stuff, don't do their best education on the free stuff. It's just quite simple as that. I'm sure you don't work for free. You want to go to work and you get paid for doing stuff. But if somebody says, well, I'm not going to pay you, you're not going to give them the best work, are you? You're not going to do any work from that point of view. So, trying to get an education. Yeah, I do a lot of good stuff on this YouTube videos and the podcasts I do, but the best education is not in these. It's actually in my courses, because I've got structure and process and I can really get into detail and everything with you. So if you are somebody who is looking at the market, get into the Trading Mentor course. It's dirt cheap. It's under $1,500, really dirt cheap. And it's got some great education in for you if you're just trying to get started and looking to get into the marketplace. If you are more serious and you really do want to be a trader and you're prepared to put the time and effort in to get it right and get it done the first time and do it properly, then look at our flagship course, our Diploma of Share Trading, because it's hugely detailed and structured, and people get huge results out of it, but you need to be prepared to put in that time and effort for yourself. So looking at this is what I find people don't understand, just even the simpler things like short-term bar analysis that we teach in our beginner course, is understanding what the market sentiment is, what it's likely to do, what's it going to do the next week. And this is the sort of stuff that we teach. And the reason why we teach it is because you need to understand, and people panic because they don't understand, they don't have a process, they don't have a plan. And so people have been panicking the last 2 weeks with the Dow because it's looked bearish. All the media's talking about how it's going to crash and it's terrible and this sort of stuff. So people are worried. But if you've got a plan, then you don't need to worry. And it's like standing in a room with the lights out, you know, and you hear noises and whatever else, and your mind might go crazy about what's happening and you get emotional. But then when somebody turns on the light, you get more information, and you know exactly what's going on. And knowing gives you less fear and gives you more confidence. And so if you're trading the market at the moment and you're not confident and you're guessing more, and this is where you need to be honest with yourself, then you really do need a better education and have a solid strategy and a plan. So what's the strategy and the plan for the Dow? Well, right now I think it's looking all right. I think we might get a bit more downside on the Dow, and that's not necessarily off the cards. Do I think it's going to have a huge pullback? No. Do I think it's going to be a crash? No, I don't think that at all. Actually, I'll get rid of, delete that one. I'll put another one on. So there we go. So do I think it's going to be bearish? Possibly. I think downside risk is down to that 22,527 if it does continue to go down. If it does continue to go down to that level, then you're talking about a 39% fall over a period of time. I think we may see a general folding over for it to come back to that sort of level, but I don't think it's going to be any big seriously straight move. I think it's going to be nice folding over if it does do that. That said, it doesn't mean stocks aren't going to go up, and this is really where people that do they buy ETFs and they think, well, I'll buy an ETF of the market. Well, to me, ETFs is a cop out. They're not. You can do far better just on the Dow or the S&P. You pick the top 10 stocks on the Dow or the S&P, you'll outperform your ETFs. No problems at all. Just buy and hold them, and that's it. If you want to put a little bit more work into it, you'll get better returns again, because there's always stocks going up when the market's going down, and so you just need to have the skills and the rules around doing that. At this point in time, the Dow looks like it's a little bit short-term weakness, more longer-term bullish. But I'm going to have a look at a few stocks today on the Dow. Not on the Dow, in the US market. And I want to look at some of the ones that are actually reporting. And so we've got Amazon. I'm going to look at Alphabet or Google. I'm going to look at 3M and Mattel. But here, looking at Amazon, amazing stock, isn't it? Looking really, really nice at this point in time. Again, it's had a little bit of a short-term weakness. Now, that's just normal for stocks. Again, like I was talking about, it did fly off a little bit too much through here. But looking at this, it's just coming back to a bit more momentum that it normally would have. And this is why I keep saying to people, is stocks will always come back to their normal average or momentum at this point in time. So if I put let me get out of here. What am I doing here? If I just put a trend line through, you can see here, there's one angle. And if I put the next trend line on, you'll see here's sort of another angle. Now, it's likely to break through this. If it starts breaking through this, then it might likely to fall a lot further at this point in time, just because of the steepness of this angle. But I really don't think it's going to be too bad at this marketplace. And but if it does fall, that's good. If you are in it, then you do need to have some exit rules. Now, this would have fulfilled some exit rules for me already. I would have been out of this already. There's a couple of exit rules. There's 3 exit rules that I can see right at this particular time if I was in this stock during this bullish run. So if it does fall away, where's it likely to fall to? Let's go here, put my little price retracement tool on there to here. And I'm just doing really basic work here. So if it does fall, it'll probably go down to that 1448. That level. Oops, sorry, I just didn't want to do that one. I wanted to use my other tool. It'll probably fall down to that sort of level there. So if it goes further, it'll go down to that level. But I'd probably think it will probably get down to that sort of level, which is a reasonable move down. That's why I would get out of it. If I own this stock, I wouldn't actually necessarily be in it now. I would have, as I said, there's several rules that I would have exited. I'm not telling you if you own the stock to exit. I'm just saying just be prepared for it to fall away. It depends on your strategy. Some people will have that strategy to hold on to it. Next stock I want to have a look at Google, another huge big stock. I mean, obviously Amazon and Google are in those FANG stocks, which take a big chunk of the S&P 500. And again, this one's falling away a little bit, just reassessing itself, but it's not as steep as Amazon, as you can see that move up. hasn't been anywhere near as steep as it was as it was on Amazon. And you can see here how this sort of angle is really where this stock goes to, and it'll probably coming back to that line in this current move down. So if I put my nice little tool on here, you can see here there's 161% it's moved since January 2015 through to July 2018. So it's a nice looking stock in terms of that. But if I now put a retracement on there, didn't put it onto the right area. Can we just drag it down to there? You can see it's fallen 25%, so it might likely come down to that, as I said, under that grey line there, around that $973 mark at this point in time. Has it filled some of my sell rules? Yeah, 1, 2, 3. Yeah, again, 3 sell rules for me are sitting on there, but I'd need to do a little bit more work. But at this point in time, if I own the stock and add a more longer term buy and hold strategy, I wouldn't be too worried. I'm just looking at some short-term weakness for a more longer-term gain at this point in time. But if I was more of a trader, I would have been out of this already. 3M, another great company. 3M's in the Dow, if you didn't know, and we get another great company, looking quite nice at this point in time. And again, just taking off a little bit. Yes, another stock that I would have exited on our rules that I actually teach in our courses. But again, it's just pulling back to a nice little safe area. And I think, again, short-term weaknesses. I think there's a lot of stuff on the Dow that I think is looking really, really good at this point in time. You can see here it's fallen down to that 50% level. So we'll see if it does fall through that level. It'll probably go to then $8.82. And then it's possibly going to go, if we go for the longer move here. I'm only just putting really basic stuff on here. I'm not really putting any sort of advanced type of analysis here, just really simple basic stuff. But here it's probably headed down to that $1.80. So we got the $1.82 and then $1.78. I'd say if it goes through this level at 150, but right now I think that 176 to 180 will probably pull it up in terms of if it does continue to keep falling, which it looks like it's going to do. This looks more exciting to me, Mattel. Have a look at that. This is looking awesome looking stock. It's also all-time high was in May 2013, but looking at it, looking at this, there you've got some nice little support level right across that sort of thing right through there, and it does look like it's coming down. So at this point in time, we'll see whether that level holds to $12.21, and if it doesn't, then we can move that. That's probably moved down around about there, but I'd say this stock is probably just about had its run, because that's the lowest at this point in time. Back in March 2009, it went at $10.36, so it's not likely to go through that level again. And if I put my nice little tool on here, you can see here it's fallen. If I just flip those around, and price flip, that didn't work, did it? That didn't work again either. I'd say it's got a little bit more to go. I don't think it's going to be super bearish much further at this point in time. I think from here to its all-time low to its all-time high, you can see here it's gone through 75%. Normally 90% would pull it up. So let's whack 90%, see where that is. There's your 90% just above that black line. So $10, $9 to $11. It's nearly there. So if it does fall down, it'll probably find some support there, double bottom with here, and then it'll be an awesome looking trade. So stick this one on your watch list, because if it does find support at or above this level, then there's going to be a phenomenal nice rise up out of it, because we can see here how far this stock went after this low. There's 367%, so watch out for this one. I think that's all for me for looking at the US stocks at this point in time. As always, if you do want me to have a look at a stock for you, just type it down. On this US report, just type US stocks on it. This is not for any Australians listening to this. Put your request on the Australian report, not the US one. This is for US stocks only and markets, if you want me to look at stuff. If you've got questions, please put them down here. And remember, hit subscribe now. Subscribe doesn't mean we're going to contact you or we're going to send you emails or you're going to be bombarded with stuff. That's not what subscribe does. All it does is it makes it easy for you to find our videos. When you open up YouTube, there's a tab up the top. Hit your subscriptions and it'll just show you where our videos are quickly for you to access them. So that's all it is. And the more you subscribe, the more you like. If you do like our videos, hit that like button, share them with your friends. So that helps us and we help you. It's a nice little win-win-win. So just click like right now, hit the subscribe button, and we'll talk to you next week. Good luck and good trading. Take care. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.